No kidding. Rest of the world seems to be in rough shape, but the U.S. hanging in there, which is why I think it's so important that we keep taking the pulse of our economy, especially the employment situation. And if you want to get a read on employment, it's always worth checking in with Paychex, P-A-Y-X. That's the country's #2 payroll processor. It specializes in small and medium-sized businesses. You know, the kinds that actually create jobs. They don't do this stuff like the big dogs. Plus, Paychex also has a growing outsourced human resources division, and the company made a series of small software as a service acquisitions, build up its presence in the cloud. Now, Paychex just reported this morning, and the company delivered a strong quarter. Earnings coming in at 47 cents a share, a 1 cent beat, higher than expected revenues. Management reaffirmed the full-year outlook. Crucially, the company's payroll revenues grew by 4.5%, better than the 4% number that Wall Street was looking for, thanks to an expanded client base, as well as higher checks per payroll and higher revenue per check. Those last two suggesting a stronger job market. Paychex is kind of a company that makes a killing when short-term interest rates move higher because they collect interest on the money they've hired, that they bring in. And you remember, they take the money in, and they have to pay it out for the check later. Until rates rise, though, the company's paying you to wait with a bountiful dividend that yields 3.5%. Let's take a closer look with Marty Mucci. He's the president and CEO of Paychex. Hear more about the quarter and whether small businesses are hiring. Mr. Mucci, welcome back to Mad Money.
Hey, Jim. Thanks for having me.
Okay, Marty, it looks like, obviously, the street loves the quarter. I'm trying to figure out whether it's because of the growth in new business, the incredibly strong human resources, or the fact that you said, listen, we're going to accelerate our sales force growth because we have so much business.
Yeah, I think that's a little combination of all those. You know, we're a solid performer. We come in with what's expected or a little bit above that. We got a solid financial position, certainly almost $1 billion in cash now. You mentioned a great dividend yield, and the sales were really strong in the first quarter, coming off the second half of last year. So nice momentum to get the new fiscal year started for us.
Now, Marty, at one point in the conference call, you're asked about you've seen slower hiring than lately, and you did say that the hiring has been tempered a little bit the last 3 or 4 months, although it's stronger than last year. I thought it was pretty interesting that you could do this quarter with that tempered hiring growth. How come you were able to do even better than you were when business was actually when more businesses were being formed before this quarter?
Yeah, I think we're getting more effective in the sales approach. You know, we've built a couple of new bank referrals that give us referrals for sales. Franchises, something we started really the last 18 months has come on pretty strong. So not only our strong CPA referral channel for new sales, but now banks and franchises are recommending Paychex. And it's really helping us. Not only that, we're doing some virtual sales. So we're selling over the phone into areas where we're not, and that is really picking up traction as well.
This was the first time that I said, oh, boy, do I have to start worrying about Brazil and Germany? I mean, I'm always thrilled when companies expand, but both those countries have seen a downtick. Is this the right time to be aggressive in those two areas?
Yeah, I think it is. You know, Germany's still pretty strong from an economy standpoint, certainly for Europe. And we doubled our size there with an acquisition last year. Both are doing very well from a sales perspective and a client retention. And Brazil, which really just kicked off last January, is really showing some real traction to get started. We're working a lot with the CPAs there to develop the referral channel, and we're doing some of their back office work to get started as well. So we're really off to a pretty good start in both countries. And, you know, Jim, we're keeping it central to those two countries and maybe another one in the future. We're not spreading ourselves too thin. The big opportunity is certainly here in the U.S., though.
Okay, let's talk about the tailwind in the U.S. Versus the actual same thing, which could be the headwind. I look at the Affordable Care Act, and I think, you know what? I got to throw my hands up. I don't understand it. I've actually had people come to me saying, please explain it. In full disclosure, I'm a Paychex client. I say go to Paychex. But I also know that there are people who are afraid to expand past a certain point because they're afraid that they get caught by the 50-person rule. Is the Affordable Care Act a out and out plus for you, or is it a plus and a negative given the fact that some companies are afraid to hire?
Well, I think you're right. I think it's a plus and a negative right now because I think it has kind of slowed down companies from hiring. You know, when they see the sales coming in, they see consumer confidence up like it is, I think they'll start hiring. But they are hiring a little bit more part-time. They're being careful about the 50 rule. They're confused as to when it starts. But that's when a company, as you said, like Paychex can come in and really help them out. We have a number of products that can help them tell what they need to do, when they need to do it, and we can do it for them. I think the insurance sales will really be able to tell in the next few months. This is when a lot of the benefit plans change hands, and you'll see a lot more activity in the October-November timeframe for new plans.
All right, one last question. I was thinking that one of the reasons why the stock was so strong wasn't just that it was a good quarter, but now people can look forward to Fed funds rate going higher. That is all the chatter of all the hedge funds. If you got a % increase in Fed funds, what does it do to Paychex's bottom line?
Yeah, 1% is about $20 million in annual revenue. So it does mean a lot to us. And I think the Feds, have come out pretty strong about raising the short-term interest rates next year, 2015. They seem to be trying to find a way to do it as fast as they can, but as easy as they can. But it means a lot to us. 1%, 20 million, about 20 million in revenue.
That is a lot of money. Thank you so much, Marty Mucci, President and CEO of Paychex. This stock is still a buy, even up this big percentage gain. Mad Money's back after the break.